What's up, everybody? Nick Campo here. This is Ben Singleton. This is the NBI Financial Group podcast. What is it called, Ben? I'll tell you what it's called, Ben. It's called the Loan Guys. The Loan Guys, because we do mortgages. We give loans.
That's right.
How are you doing today, Ben?
I'm doing great.
You look good.
Thank you. You too.
I appreciate it. Got to look good in
Absolutely.
order to. You have to look good, and I tell people this. You look good to play good. If you look good in the mortgage industry, you will treat your clients well. You will get them into multiple great deals. This is episode 1. Let's tell the people just a little bit about us.
All right.
What's our why? Ben, what's your why? Why did we start NBI Financial Group, the mortgage broker shop?
Well, we really wanted to take it direct. So both me and Nick have a background working for lenders. On the operation side, for me, I was an underwriter for over 10 years. And it was really made me feel great being able to help clients get into their home. However, we really wanted more out of it, to be able to help the clients more. So what are we doing? We now have a broker shop where we now have a broker shop where we work with 10 different lenders and are able to help put our clients into the best situation for
More
them.
than 10. I would say more than 10.
10 right now. We're actually in the process.
We're in the process of signing on a few more, and which is a little bit different, right?
It is.
So most people, they go to a loan guy.
Yep.
Mom, dad might say, oh, yeah, Johnny down the street, he got me a great mortgage.
He probably did an okay job.
Okay, yeah, absolutely. And they go to them, and they could work for a company such as, Movement Mortgage or a Waterstone Mortgage or any of them, right?
Yep.
And those mortgage shops are great, and they're great at what they do, and I would never say a bad word about them because they're doing what I like to say is very noble work.
We both worked for them before.
Both worked for them before.
Absolutely.
Helped a ton of freaking people.
We did.
Helped a ton of people. But the difference between them and us is what? We can shop you
Correct.
amongst a multitude of lenders, and we're adding more who can do more specialty stuff. So we can do everything.
Correct.
You want to know where I find the value as well? Is Realtor.com. I think it was Realtor.com or National Association of Realtors. Don't quote me on the source, but they just published a fact that mortgage brokers like ourselves
Yep.
get the client a better deal. What do you think a client's their first question is? I mean, my first question would be, oh, you're a mortgage broker and you want me to come to you? What do you think their first question should be to us?
What do I need to do to get the home?
That's not going to be their first question.
So
What is the cost of your service? You don't think that's the first question in a lot of people's minds?
that's one of the first questions.
It probably is the first question. They know the home they want. Now they want to know how much it's going to cost to get there. A lot of the ones I talk to anyways. And if they don't say it, they're probably thinking it, right?
Yes.
Who walks up to somebody and, it's like you going to an ice cream shop, ordering an ice cream cone, but not knowing it costs $5. Like, you have to have a different type of wealth not to worry about cost, right?
Yeah.
What's the cost of a mortgage broker? Us anyways.
To the clients?
Yeah, what is our cost to our client?
Nothing.
To the borrower?
Nothing.
The person buying the house, Ben.
The lender pays us.
Who?
The
Who?
lender.
Oh, we're on the lender paid compensation plan.
That's right.
So, So that means that when a client comes to us for our services, we shop a multitude of lenders. Those lenders want what? So that they can stay in operation.
Our business.
They want our business. So that study by either Realtor.com or National Association of Realtors, when they were studying why mortgage brokers keep taking up more and more of the market share, very interesting study, I should mention. Maybe one of the reasons is what they said. On average, we get a lower interest rate, anywhere from, in 3/8 of a point to 3/4 of a point lower on average than if you just walked into, say, a retail shop.
Well, and it makes sense. There's more competition.
More competition.
What does competition do? Drive prices down.
Yes. So when there's a lot of supply, and that supply is all wanting the same thing.
Yep.
And so there's 10 lenders that want one person's business. It's going to force them to go down, and it's going to force them, You have the power when you work with a mortgage broker.
Correct.
As a client of ours, as a buyer of a home, as a borrower on that mortgage, you have the power when you work with a mortgage broker.
And not, yeah, and that does not even go just towards cost and pricing and rates. That also goes towards the different products.
Hey, y'all. Thanks for watching this clip. Go ahead and bang that red subscribe button.
And turn on notifications by ringing that bell so that you can keep up with all of our mortgage and real estate content.
Now back to our regularly scheduled program. Let's talk about one more thing before we hop into the products, right? Because I was getting there. The next thing I want to talk about is closing costs on average are $1,500 to $3,000 less, according to that same article. On either, can't remember if it was National Association of Realtor article on their blog or if it was Realtor.com. But so you got a lower rate on average, a lower cost on average. That lower rate can save you anywhere from $3,000, $4,000, $5,000 over the life of the loan
to tens of thousands.
To tens of thousands. I did a mortgage today for a guy. Went down a little bit on rate for him, got a better rate. Guess what happened?
What?
Over the life of a 30-year loan, guess how much that rate saved him? The lower rate saved him, and it was about 3/4 of a point.
3/4 of a point? $30,000?
40.
Yeah.
$40,000. That's one happy camper.
Yeah. Oh, I'm sure.
So this is what we're telling you. You work with a mortgage broker. You don't pay us. We're a lender paid comp. In rare cases, as full disclosure, in rare cases, if we have to cut our compensation, we have to flip to what you call a borrower paid, and we would lower our compensation to as low as you possibly can. That's in a rare case where we have to do it in order to help you qualify because we're up against ratios or something like that. And in those cases, you would pay us directly. However,
it's 1%.
It could even be less than 1%. But even in that case, that is way less than you're paying anybody else.
Correct.
They get low, on average, $1,500 to $3,000. So you're saving $1,500 to $3,000 up front when working with a mortgage broker, and then on top of that, you're getting the lower interest rate. They don't pay us a majority of the time. I would say 99.5% of the time, it's a lender paid compensation, right?
Right.
Saving $40,000 in some cases over the life of the loan, which this isn't every case. We have to look at each case individually. What else is great about a mortgage broker? And you started to talk about it. We work with how many lenders?
Right now, 10 and going up.
So if I walked into, say, a Movement Mortgage, Waterstone Mortgage, or Quicken Retail, or Rocket Mortgage,
yep.
How many lenders do they work with?
Oh, just themselves.
Just themselves.
Correct.
That doesn't mean they're bad, though.
No, they are great at what they do, but what they can do is limited by their products. And if you fit into their little box, if you are the perfect client for them, you will have a great experience.
100%.
But if you don't, for example, if you're a self-employed client who has a really good CPA, has a lot of write-offs that probably would not be there if it came down to paying your mortgage, right? So you are a very qualified individual who will be making your mortgage payments. But how is it going to be looked at by the majority of lenders? Are going to sit there and look at it and say, well, here's your net income because of all these expenses. That's not how we would treat you. We have lenders that have a specialty bank statement loan.
So we average your deposits into your bank account, and they would only exclude stuff that they can't prove is from business, but from a business transaction.
Correct.
We can look at business or personal, and they would take usually 50%, not all the time. You can go up to 75, 100 in some cases, depending on the lender. But we would take your cash flow. So a person who is qualified for like a $15,000 mortgage, I just did this one. You know this one, owns a massive company here in the Carolinas. Yep. By the way, we're licensed in North and South Carolina. We're going to get more states, but we are currently licensed. We're Carolina boys. Currently licensed from upstate New York, Carolina boy. From where? What do you call Myrtle Beach?
You're more southern than me now.
Oh yeah. Oh, absolutely. I embraced the South. I embraced it. What Dixieland, baby. I'm a Dixieland delight. But what is it that you call Myrtle Beach? You're from Myrtle Beach, and I'm telling the people, when you're talking to your realtor partners,
Oh, the Grand Strand.
the Grand Strand. What in the freak is that? I call it Dirty Myrtle.
No, the Grand Strand. That means like Myrtle Beach, North Myrtle Beach, Socastee, Conway, all that area.
Gotcha.